Martin, this really is Secretary Yellen's baby in some ways. How do you think something like that would actually work?
Yeah, it strikes me as relatively difficult to really enforce compliance on. The compliance mechanism for this should be insurance. And it's true that insurance is critically important for seaborne oil. It's a big oil tanker. You can't really enter any meaningful port uninsured. So insurance is something that you must have. And it's also true that European companies, and here I include UK in the term Europe for the time being, European companies, facilitate 95% of the insurance of oil shipments sort of around the world. So in that sense, you could hypothesize about a system whereby if you pay below the cap, you can get insured, but if you pay more than the cap, you cannot get insured and therefore make that unattractive. But it's not impossible for other entities that may not want to participate in something like this to provide insurance. Individual states can provide insurance. The Russian government could provide insurance. So from that perspective, the mechanism of enforcing compliance for insurance might actually be quite difficult to really maintain in the end.
How would it work in the gas markets? In some ways, as the French president indicated, easier because the gas that flows into Europe generally goes through pipelines. But nevertheless, the gas that comes through those pipelines is subject to contracts. And if you were to do this, presumably you would be breaking contract, providing Vladimir Putin with that opportunity maybe to cut off supplies.
Yeah, look, there are two things about gas. First of all, the volumes have already deteriorated very meaningfully. So if you look at the volume of gas that Europe would get from Russia as recent as, say, March, in March, the flow was still about 350 million cubic meters per day. That's already down to 110. So the volumes have already declined very meaningfully. The other thing to consider is that in terms of financing the government, the Russian government, oil is critical, but gas is far less important. So the ability for Russia to sort of use gas, perhaps in sort of non-economic ways, to achieve other means is far greater. It may not be quite the case that Europe says, well, we put a price on a cap on the price of gas, that it would continue to flow.
So, Martin, what I think this does highlight, though, is a recognition that Europe still needs Russian energy supplies, and that just cutting it off altogether on either side is not really an option. And I'm wondering if, as panicked as everyone feels about an energy crisis, are we going to be in a situation where we may be oversupplied? I mean, it is still a cyclical commodity. If weather holds up, we may not need as much in the winter. What is the possibility of something like that happening on your radar?
Yeah, it would be the case that if you were to sort of hypothesize a situation where all of a sudden Russian energy commodities were to flow freely again, all of the oil can be freely exported to Europe, all of the gas, then the oil markets and the gas market would weaken. But that's not quite the case that we're in. I do think that the situation around the Ukraine has revealed a vulnerability in Europe in terms of its reliance on Russia that in the long run is undesirable, also from a European perspective. So the idea that Europe will wean itself of Russian gas over a period of years, I actually think that will hold even if, say, the conflict were to materially de-escalate. So you're right that, if, the situation were changed, you can see situations where those commodity markets would weaken, but it doesn't seem to be that is the trend that we're on.
Martin, the critical question for anybody looking to invest money in Europe over the next few months is, will there be energy rationing this winter? And if there is energy rationing, what kind of an economic effect will that have? Can you answer that question at this point?
Well, look, history doesn't really give us much to work with here. Quite often, people in our seats, we look back at previous cycles and try to take lessons from history. Here, history does not really provide any guide. If you look at oil, it's hard to foresee a situation where there's rationing, as in the oil market is truly global. The seaborne market connects various parts of the world in a rather efficient manner, in such that we can direct cargoes to the places where they are most needed, and that should avoid any rationing. But in gas, there is an uncomfortable likelihood that this may need to be the case. If Russian flows do not increased from here on, then you would need to attract such large volumes of LNG to Europe, whilst at the same time still destroy so much demand that you either end up with very, very high prices or some sort of rationing scheme.
Okay, so let's dig into that a little bit more. So take a look at, say, Brent and then energy equities. What does a recessionary scenario where we get that kind of deep demand destruction look like in the oil price and oil equities?
Well, look, the equities have turned out to be very sensitive to this idea over the last sort of week or two. But the idea that recessions drive meaningful decline in oil demand were true in the last two recessions. But the last two recessions were not your garden variety recessions. The last two were COVID and the GFC in 08, 09. If that is what people mean by recession, then sure, if we have a repeat of anything like that, demand will fall and prices will decline. But if you look at the two recessions we had before that, the one in the early 2000s, the one in the early 1990s, they were by and large recessions where in the early 2000s, oil demand never fell. It only, the growth slowed down. And the early 1990s, oil demand was down year over year by a relatively modest amount for about 2 quarters or so. If we get a sort of garden variety recession, sure, prices will not go up, and they may even fall somewhat, particularly given the extraordinary rally that we've enjoyed over the last sort of 12, 18 months. But if that's the type of scenario, many of the supply side issues that we talk about, lack of OPEC spare capacity, downside risk to Russian production, risks in Libya, shale effectively growing at its maximum speed already, those would still be there. And it's doubtful whether oil will actually decline an awful lot if that is the outcome. Demand expectations have declined already significantly. So it's not something that the oil market is unaware of.
Just sticking with the demand story, one factor we haven't talked about thus far is what's happening with China. Today may be real, it may be not real in terms of the strategic shift that maybe we are going to get from Beijing at some point in terms of loosening up on COVID zero. We have seen them reducing the quarantine rules. When China does reduce COVID zero policy, when it does open up its economy, what kind of extra demand are we going to see, and what kind of impact is that going to have on energy markets?
Yeah, potentially very significant, I would say. So there sort of broadly sort of two sort of categories of oil demand that you can think of. One is jet fuel, and the other one is everything else. So jet fuel demand from China has been low because aviation, both domestic and international, has been low. But in April and May alone, we lost 1.5, possibly up to 2 million barrels a day of Chinese oil demand in sort of non-jet fuel, simply because of the lockdowns. So you can imagine that if the lockdowns were to unwind, that demand would come back. 1.5 to 2 million barrels a day would be a serious tailwind for oil demand from here on. If on top of that, there are restrictions being unwound in terms of travel, both in and out of China, and if business people, make trips to China again, so the Chinese tourists, rediscover the rest of the world, we can quite quickly get 500,000 barrel a day of jet fuel consumption back from China. So I'm not surprised that oil prices are sensitive to this news, as they are highlighting over the last sort of 24 hours. If Chinese demand were to come back, that would be meaningful for the global system.